Hello and welcome back to another session of Market Outlook series with me, Kavita. I'm the founder of EXP-Invest and we are here today to talk about Nifty, Bank Nifty and the intersector charts. Let's go forward with the 3-minute chart of Nifty and see how has the market unfolded this week and what does that tell us about the weeks coming ahead. So every week we'll start with the smallest time frame, that's the 3-minute chart. Initially, let's look at the price, and this is where the last week ended. This was Friday and then this has been Monday. What you can see is Monday, Tuesday, Wednesday, Thursday, Friday. This entire week we did not experience a lot of positive activity. In fact, from a previous week to this week close, the market has been negative, as you will also see on this weekly time frame. So we've had a bit of a red closing. This is, you can call it a form of a doji formation or a hammer formation, but at the top. Now it's a spinning top if it's at the top. If it's called a spinning top formation, it suggests a bit of subdued activity this week, as we've already seen. On Monday, we opened with a side consolidation. Then Tuesday, we saw a little bit of upside. And clearly, you can see this zone, which I've marked with the green color, between the range of 21,348 all the way to 21,400. This range has been acting as the support and resistance multiple times this week and partly for the last week as well. So this is an important range and it continues to act as resistance currently. Now, the big correction that we witnessed on the day of Wednesday, which was around 2.6% and almost 600 points on Nifty. That is nothing extraordinary. I know there's been a lot of panic around it. People are like, oh, market's crashed. But let's not call it a crash. I would simply call it a correction. 500 points, not that big a deal. This bounce back, however, the fact that it has taken resistance at the level of 21,400 suggests that we can expect another leg of correction. And I am looking at the level of 20,850 for a probable support from where the bullish rally is going to start. I also believe that the underlying trend of the market is still very strong, and this dip has been a great opportunity for me to deploy the rest of the capital that had either not been deployed in the previous rally or had freed up because of the stop loss triggers on the position which I had initiated a lot earlier. Coming to the 15-minute time frame, again here you can see that a big negative divergence has forged, and it's like a triple negative divergence. How is it a triple divergence? Negative divergence. You can see one negative divergence here. You can see one negative divergence here because this peak is higher than this peak, and then even between these two tops there is a bigger negative divergence. So as we go higher and higher time frames, you will see that this negative divergence is a little evident on all time frames. Not just that, with this, like from this point onwards, I would say Nifty has on the 15-minute time frame started to move into the negative range. But this peak, which sustained above the level of 60, this gave us an indication that we could expect another peak, which came at the level of 21,600 approx. But then again, a negative divergence confirmed that the momentum was losing its steam to some extent. That being said, let's move on to the 75-minute time frame. So on a broad sense, the 75-minute time frame is still quite bullish. And why is that? Because the RSI here you will see is still way above the level of 60 and the range of the RSI is still quite bullish. However, there is also a small negative divergence which has developed on the 75-minute time frame here on the RSI of the 75-minute time frame. Not only that, the volume is my bigger concern. This upside has not seen as much volume, especially in the last part of the rally. So these days of the rally where the market's high was actually forged on the 20th of December, we did not see a lot of participation in the market. So this part is what was a very telltale sign that we can expect some correction. So that is why on the 20th of December, I was up the next morning doing nothing but setting my stop losses in the market. And then when this day unfolded, that is the day of December, my trading view and my trading accounts were all ballistic because everything was just popping with alerts. Stop loss triggered, your red line has been triggered, your trade has been executed. I was like, this was not bad because that basically meant a lot of profit, and that also meant a lot to trade profit, mark to mark profit. What that basically means is how did the price close versus your execution price. So if I exited, say, at the level of a stock at the level of 100 rupees and the stock closed at 98, it means I've made 2% on a mark to mark basis, which also is a proof that the unrealized profit, I was able to protect it. But since the market, I believe, is still in a very bullish zone, since the bottom of 21,000, when the level of 21,000 was touched on Nifty, I started purchasing again, which I think is a common theme followed by a lot of other people, because you can see the price has jumped up. Now, the fact that this jump up has not happened again against very encouraging volume, rather the volume has declined suggesting to us that we can expect another correction, and I would expect that correction to go down to the level of 20,850 on Nifty, which is also incidentally the 100 EMA of the 75-minute time frame, or the 500 EMA of the 15-minute time frame, or the 20 EMA of the daily time frame. They are all basically the same lines depicting different EMAs on different time frames. I hope you got the factor of 5 there. But as you can already tell, that moving average is very important. And also, if you do the past analysis of Nifty, whenever it takes a strong rally like this, we can see that since this part, it hasn't touched a single moving average that is plotted on my chart. So it's high time that it comes and revisits, takes at least one support at the 20 EMA, because it is what it does. If you look at the previous rally here, let me delete this line entirely. If you see when this strong rally was unfolding, so once the price broke out of the cluster of moving averages, just focus where it has been taking support. 2 times it took support on the 20 EMA before finally breaching it here and taking support at the 50 EMA. This is the 20-day EMA. So the Nifty price, when the strong upside unfolded, twice it took support on the 20-day EMA of the daily time frame. Here also, I am expecting that another leg of downside will come in the next week, and the level of 20,850 is going to get touched, where I am going to deploy even more cash to the market. This is why we need stop losses in place. Now, because I had strict stop losses in place, when this top gave away, my stop losses got triggered at a very insane rate. I managed to save 1.5% of my entire portfolio, which would have otherwise simply turned to ash or nothing, which is less than ash. And now that the market has come down to my first support level, I was able to deploy that cash again. And that deployed cash already on a mark-to-market basis is delivering more than 0.5% profits for me in just today's market end. And again, I have set stop losses on the new positions, and I have revised the stop losses on the old positions that did not get triggered, that did not trigger their stop losses. Now, when the market goes down, I have further 30% cash left. I'm going to deploy all 30% of that remaining cash in the market so that I am fully invested. So that's basically my strategy, and that's my analysis of Nifty for you. I think today's discussion was very enriching because the chart has just so many interesting nuggets to take away from it. I have emphasized how important it is to use factors of EMAs, because you might be using the 20 EMA, somebody else might be using the 100 EMA, somebody might be using the 500 EMA, right? Or 200 EMA. But when you use numbers which have a lot of factors, there is a good chance that you will be working with stronger support resistance zones. So using trend lines, using moving averages, they are very important when it comes to identifying important price zones. Let's move to the chart of Bank Nifty now. 3 minutes time frame. Let's look at the RSI. So what you can notice here is the RSI of Bank Nifty turned a little bearish where it started breaking the level of 40, and it's gone into the bearish zone, I would say, since the 19th of December. 19th of December is also the last time it took support on the 500 EMA on the 3-minute time frame until it broke it for good. So here also took support at the 500 EMA, this gray line. Let's make it bolder and brighter. This gray line, it took support, it broke it, it came up, and now I expect it to go back down again. So where is the support for it? 46,400 is where I think the support is. I am not very bullish on banks, as most of you all know. I'm not bullish in banks to the extent that this very recent rally that happened, I did not even touch that rally. I just bought a little bit of ICICI Bank because I think that is the best candidate for making money of banks in this market, especially want to go for private banks. So here we can see again on the 15-minute time frame also that we have moved into the negative range, which means that even the price is very close to the high, level, RSI is nowhere close back above the level of 60, 70, 80 that it was forging. It's now barely going above the level of 60. So what this indicates is that there is a shift in the way the price is moving. There is a change in momentum when the price goes up versus when the price goes down. So if there's more excitement happening when the price is falling, then the RSI is going to pick up on that before that excitement grows to the level where it pushes the entire price down. So before a big upside like this happens, there is something that changes in the price here at this level. And this is what builds up like in a pressure cooker, and then it just blasts to take the price up into a strong trend. So this subtle change, when it is happening, it's picked up by RSI, and that is what gets reflected as the RSI range shift, which I've talked about a million times by now probably. Moving on to the 75-minute time frame. Here again, you can see the decline in volume is extremely evident. So even though the price is going up, the volume activity in the banking sector has clearly diminished, which is an indication that things are not as rosy as we want them to be, especially for the banks. The broad market looks pretty good, but what I'm thinking or what I believe is that a lot of great opportunities are going to come up in other sectors other than banks. Now, the 75-minute time frame, there is negative divergence. We can see that the volume is dull. We can expect some correction here. And again, the correction is expected to go all the way to the 100 EMA because the 50 EMA and the 20 EMA are already touched on the 75-minute time frame here. So I expect the 100 EMA, which is the green line, to be touched. So 46,400. Now coming on the daily time frame. On the daily time frame, also the volume decline is very evident for Bank Nifty, and the RSI is not as bullish as it was on the Nifty's chart. Again, there are also these two big gaps. So this gap is halfway filled, this gap here, but half of it is still left. So I expect it might get filled, or actually no, it has been entirely filled. This gap got filled in this decline. Today, Bank Nifty has also been more weak than Nifty in general. See, the underlying trend in Bank Nifty is also still strong, but I think that a small correction can be expected with the support at the level of 46,400. And now there is 46,400, and on the daily time frame also it is almost the level of the 20 EMA. So that is the reason. Going on to the weekly time frame, do we have anything interesting from the daily chart here? No, I don't think so. But on the upside, I do have a target of 50,000 for Bank Nifty, which I believe will be achieved in this upside itself. My very short-term stance on the market is a little bit bearish, but my overall stance on the market is quite bullish. I also just gave you an example of how you strategize your money allocation and money management in the market if your very short term and slightly long term views are different. So now coming to our favorite part of this Friday session, the inter-sector chart analysis. Before that, I want to take a quick look at the comments. After I am done discussing the charts with you, I will be answering your questions. Moving on, let's change this to 15 minutes. So let's go from the beginning of Monday. And how has the market fared? It's not much trend. So let's actually go back, and I can see the market has been quite sideways. Okay, let's see what has outperformed since the opening on the 5th of December, because that's when the sideways activity really started. So 5th of December, we want the opening. Clearly, from the 5th of December onwards, we can see that the CNX IT has outperformed the market and it's moved up nearly 10%. Very strong rally there. Be cautious when you're going for IT stocks. Even though they look super, super bullish, there are some stocks which are going to trap you. Of course, the large caps like Infosys, TCS, Wipro, they look very good for both short-term and long-term HCL tech. But within the mid caps and the small caps, there are also great opportunities, but you need to be careful. Then is the CNX Energy. I have been very bullish on the CNX Energy sector, on the index and the sector, energy sector, for quite a few weeks. And now that bullishness has started to bear fruits for us. PSE stock sector is another sector where bullishness is showing up now and is expected to show up for the next few weeks. Fresh entries, however, may not be recommended because I was studying the PSE stocks before this session, and the risk reward ratio being offered there is not favorable for you to make fresh positions. So where can you make fresh positions? I would say the metal sector is looking very attractive now. I think it is coming out of a bit of a lull. Just in the Wednesday session, we discussed the chart of Nelco, where I also gave you a trade setup. Now, if you want continuous updates on the trade setup, you can search out the message where I've shared the link where you need to sign up. It's really low prices, 95% discounted. So it's just a token money because I can't give 100% discount and have you registered. Unfortunately, the system doesn't work like that, but it's up to you. Again, CNX commodities. So commodity sector, I don't really have an opinion on. Infra sector, I would say you be a little careful of infra in reality. I see some signs of topping out there. They've rallied quite a bit. So some negative divergence is forming. So if you have active positions, make sure that you're using stop losses, and there is no question of making active positions in the infra or realty sector right now unless you're super bullish for whatever reason in some specific stock. PSU bank sector. Now, the private bank sector, there's opportunity in one too, but the PSU bank sector looks a little more attractive than the private banking sector right now. Consumer durable sector, again, I'm very bullish on. FMCG also I'm bullish on. Consumption I'm bullish on. CNX finance I'm quite bullish on. Pharma and healthcare, I had been warning you against them for the last 2-3 weeks, but now I think they've given some correction and I am expecting them to, in the next few weeks, I expect the pharma and the healthcare will come to the top as the outperformers. Now, if you've been following this market outlook series inter-sector chart analysis, then I'm sure you've already benefited by it. But if you follow this kind of sector allocation that I've recommended, you will also see benefit coming to you in the weeks coming by. So let's move on to the comments and let's see if there is any request that I can help you out with. First of all, that if you want to do swing trading with me based on stocks and trade setups picked up by me at the right time, so stocks at the right time, at the right price, and at the right stock at the right price at the right time is what you need to succeed. Not just that, you need to manage your stock properly and you need to make sure you exit it at the right time at the right price. That is everything it takes for you to succeed. If you don't have the skills to do all of that detailed analysis yourself, then it's best to associate with a financial analyst or a research analyst. To do that, simply go to my Gap profile and sign up for my subscription services where I give you short-term trading. Ashok ji has a question on Cipla and Auropharma. Auropharma is a no-go because I think it's too hot. To touch, avoid that. Cipla, on the other hand, I think looks quite attractive for a short-term trade, even or a long-term trade. I am expecting it to give a breakout above the level of 1285. Now here you can see that the volume has been, other than if you ignore this big long candle, see the price has been on an upside, going on an upside. And whenever the price is on upside, the volume has picked up, which is a good sign. Right? So this bit of a consolidation here and the volume has been slightly subdued on consolidation. I do think that an uptrend is going to begin here, fresh one, because the 75-minute time frame is already gone on the bullish range side. So has the 15-minute time frame, and the daily time frame has always been bullish even during this entire consolidation phase. So I think this is the actual uptrend. And this is just the correction. So this uptrend is expected to continue soon. So if you want to make a position, now is a good time to do that. And the stop loss will have to be a little liberal. So I would suggest you maintain a 6.5% stop loss at the level of 1161. And your target would be at the least 1319, but it wouldn't be overreaching if you also kept a bigger target of 1610 there. ONGC and also Divyank, like I said, energy sector I am very bullish on, but I want to see the stock take a correction to the level of around 197 to make a fresh entry, which I think the stock is ready to do. So wait for it to come around 2.5% lower. My initial target was 210 on the stock, which has already been achieved. So I personally wouldn't go in and make a fresh position here. But since volume profile is still suggesting strong activity, you may as well go. However, I prefer to look for opportunities more where the rally is ahead of me rather than behind me. So we'll take Anuj, ITC for Anuj. So ITC I am quite bullish on because I think ITC has already given this little breakout out of a resistance zone, and this breakout also happened against good volumes, even though it has given a pullback of around 5%. But I think it's a good time to keep ITC in your portfolio because I think it can get into fresh momentum anytime now. However, wait for Nifty. Like I indicated on Nifty, that a small correction is expected. That same thing may unfold on ITC as well. I would wait for ITC to come down to the level of around 446, 447 to create a position. Given the slight negativity in Nifty that is expected, why not save a couple points if we can? And on the upside, I think ITC is more than ready to scale to the next resistance level, which is near this 480 and around 500. So I would expect ITC to test the levels above 500 in the next leg of rally, which might take around 3 to 4 months for you. So with that, we've come to an end of this session. Thank you so much for joining in. Don't forget that I have a webinar coming up on Sunday, which will be about price zones. So if you want to learn from me how to identify these green price zones, which I mark and which I use for my entries and exits, then do join that webinar. It'll be on Sunday. It's a 2-hour webinar. More details on my Telegram channel. So thank you so much for joining in. It was great talking to you, and I will see you again on Monday in another free webinar for the Retail Trader Special Series, where, as a reminder, we are covering psychological aspects. So we've already done, I think, 3 webinars on those lines. If you're interested, you can go on my YouTube channel. I'm dropping the link in the comment for you to check it out and review those videos if you think you need to strengthen your psychological strength or you need to make improvements on your psyche so that your trading improves.